There are two ways to look at stocks, fundamentally and technically. The fundamentals include things like how much a company earns or pays in dividends. Companies that earn more and more tend to trade higher over time. Also, stocks that pay increasingly higher dividends tend to trade higher. On the other hand, the technicals involve studying the supply and demand of the shares themselves. Stocks sometimes trade in ranges. When stocks tend to trade down to a certain low level and attract lots of buyers, they have settled into what is called support. Alternatively, when stocks trade at certain high levels and attract lots of sellers, they have hit resistance. Some investors focus entirely on fundamentals and ignore technicals. Others do just the opposite. And some are like me who study both. Now, I think it's important to study the technical levels in the stock market. The stock market, as evidenced by the Standard & Poor's 500 index, reached resistance around 1475 in September and early October. As several key companies announced poor fourth quarter earnings results in mid to late October, the stock market sold off. Going back several months, there seems to be a support level in the market around 1400. If this support level holds, which means lots of investors begin buying at this level, then the market should rebound upwards. However, if the market would close significantly below the 1400 level, then the market most likely would pull back and look for a lower support level, which could be around 1325 or 1275. There's even an outside chance, albeit remote, that support could be at 1150. Such declines would rattle most investors. Unfortunately, no one can accurately predict the number of buyers and sellers on a given day. What one has to do is respect the trend, whether up or down, and make adjustments accordingly. Investors who are largely invested in speculative companies generally fare worse in corrections compared to investors in larger companies. At Armada Advisors, we've raised cash over the last several weeks and have slowly been buying bigger name companies for the most part. If there are further declines in the stock market, and we would not be surprised to see them if earnings continue to be revised downward, then we would want to take advantage of the opportunity by purchasing certain stocks. We find new bond purchases unattractive at this time. For specific questions about your portfolio, give us a call at Armada Advisors, where we are charting a better course.